Several exchange-traded funds, or ETFs, for Bitcoin began trading Thursday following an unprecedented decision the night before.
Bitcoin fund trading is underway for the second day following the SEC's approval of the first U.S.-listed exchange-traded funds tied to the cryptocurrency. Yesterday, the first day it was available, more than $4.6 billion worth of shares were traded.
One of the biggest and most awaited financial news that hit the markets recently was the approval of 11 Bitcoin ETFs. This step is now considered a milestone and a major step toward broader adoption of Bitcoin and its utility. These ETFs now make it much easier for everyday investors to get involved in Bitcoin. They can now invest without some hassles of having to own the digital currency directly. The approval is also a clear sign that the financial world is beginning to embrace this technology more openly, as it opens the door for more people and large companies to start investing in Bitcoin in a way they're familiar with, directly from their stockbrokers' accounts.
I know you're the custodian on one end, but it also means that those customers don't necessarily have to get an account on Coinbase.
People who've been buying crypto for the last decade and using it, the 52 million Americans, I mean, they already had an option, right? They could come to Coinbase and they're going to continue to do that. This ETF is really about unlocking new pools of capital that weren't previously available. They didn't have a way to get exposure to crypto. And so now they can come in and get exposure to Bitcoin. That's great. New pools of capital come in. But that's kind of the first step in people's journey around crypto. Once they get a little bit of exposure to the asset class, they start to think about, okay, well, how might this be used in different ways? And crypto is the future of money. It's going to enable people to unlock all kinds of utility, which we can talk about if you want. But I think many of them will graduate from ETFs to actually holding it directly and then starting to use it directly.
It is safe to say that Bitcoin has come a long way from its inception in 2009, which happened right after the global financial crisis of 2008, exactly when the Fed and other central banks around the world started printing a lot of money to keep the whole financial system from falling apart. This incident obviously created the urge to come out with a new form of money that is decentralized and cannot be infinitely inflated like the dollar and other fiat currencies, and that's where the Bitcoin network came. But the real questions now are, what can we expect to happen over the next few months for Bitcoin? And how can the first gold ETF that was issued a long time ago help us predict what might be happening later on in the future? But before we continue with answering these questions, make sure to click the subscribe button below to stay updated on the latest insights and trends in the world of finance. Ever since the first few transactions that happened with Bitcoin, where a pizza was famously purchased for 10,000 Bitcoins, the adoption and increase in Bitcoin popularity have been nothing short of remarkable. In the US alone, it is estimated that 67 million people own crypto, according to a Coinbase study, while 219 million people around the world own Bitcoin according to another Crypto.com study. However, when we look at the total number of crypto owners, including other crypto tokens than Bitcoin, it is estimated now that it is approximately 420 million people. Even when we take a look at the businesses that recognize Bitcoin as a form of payment, today there are hundreds of famous brands and even charities that accept it. So obviously, there is today a substantial amount of people who officially recognize Bitcoin as a new form of money, and this trend seems to be only growing, especially when we also consider the recent ETFs news and the integration of Bitcoin into the mainstream financial institutions. But still, there are some people and some entities who are skeptical of it and betting on its downfall. Most of these entities arguably view this new form of money as a potential threat to their control over fiat money and their financial dominance in general. Today, there are approximately 1.4 million Bitcoins that are left to be mined out of the total supply of 21 million Bitcoins. BlackRock alone has been buying a lot of Bitcoin lately, and their holdings now are around 50,000 Bitcoins. Some say that if BlackRock and other ETF issuers continue to buy Bitcoin at this pace, there will be a supply crunch very soon, and people will only be able to buy the new Bitcoins that are newly mined each day, which are a few hundred Bitcoins. So in this case, there will eventually be more and more money out there chasing fewer and fewer number of Bitcoins, which ultimately is going to drive the price toward the upside, especially when we consider that most Bitcoin holders today have not moved their Bitcoins around in a long time.
And what's so interesting right now is that already outstanding, there are, I think it's 19.6 million Bitcoin. There will never be any more than 21 million. 15 million of that 19.6 are in what we call strong hands. Their wallets have not moved Bitcoin in 155 days or more. That's 75% of the outstanding. So now we believe there's going to become as institutions enter, real scarcity value. And each dollar moving in will have more of an outsized impact now than it did before we got the green light.
Now, if we compare what happened to the price of gold after its first ETF was launched in the US back in 2004, we can also get an idea of how things might go for Bitcoin. For example, the SPDR gold shares price barely moved during the initial months after its launch, and so did the regular spot price of gold. The price of both of them even slightly dipped in that initial period. It took both of them almost 3 years to double in price, while the ETF gained more popularity amongst investors and brought billions of dollars of money to be invested in gold. So only after a few years did we see the price of gold moving toward the upside. It is also worth mentioning that buying and selling ETFs and stocks back then was not as easy and as available as it is today when it comes to the availability of online stockbrokers. So when we compare this to Bitcoin, it is expected that more and more money will be headed toward these Bitcoin ETFs, and then eventually toward Bitcoin, especially when the trading volume today across all of these ETFs is in the billions of dollars only after a very short period of their launch.
But I think you're right. Over the last 2 to 3 months, the market did move up quite a bit, and probably that was at least in part due to the anticipation of these approvals. So look, I'm optimistic on that. I think these approvals will bring in new pools of capital over the coming many years. I try to take a long-term perspective on this, and we really just want to help 1 billion or more people hopefully benefit from this technology on Coinbase's platform. We're not so much interested in the day-to-day movements of it.
25 years from now, 50 years from now, where is this day going to stand in the historical context of business and money?
Maybe right up there with when the first Bitcoin purchase happened, for a piece of pizza, I think for 25,000 Bitcoin or something. I don't know, we'll see, but there's been a lot of historic moments along the way. And, my hope is that we get many more of these. I'm not sure what the next one would be. Maybe a central bank holding Bitcoin, something like that would be a next milestone. We'll see.
So that was it for this video. If you enjoyed this one, make sure to leave a thumbs up and to click the subscribe button below. And with that being said, see you in the next one.